Very good morning, friends. I'm Nalini Swami. Welcoming to my channel, Smart Index Edge. And I am on the chart of 24,200 call option and 200 put option. Previously, I made video about the option premium. This is my dual option premium engine. If I apply this indicator, automatically, if I click on the any call option, automatically it selects the opposite equivalent put option. So what we are seeing is 24,200 put option and 24,200 call option. Apart from that, in this dual compression engine, I have coded for pivots. This is the pivot for the put option, and this is the pivot. Blue color line is the pivot for the call option, and it is coded for the Nalini grid. Nalini grid also has been included in this. Here, this is the CE grid baseline and PE grid baseline. So I have taken care of everything, and I'm going to show you something interesting. What happens if you start noticing this, you can also gain. Most option traders watch only one thing, that is the premium. They watch only CE premium, they watch only PE premium, they watch option chains, they watch open interest, but very few traders ask a much deeper question. What happens when CE and PE premium start moving toward each other? Yesterday, I mentioned my traders in my group, community group. I posted them, watch CE-PE. Watch the 24,200. When the price was near the 24,200, uh, underlying Nifty, I asked them to watch the call option and put option. They were approaching each other. They were almost each other. 89 neck to neck, 89.90, 89.90 like that. So, and what happens when they suddenly start moving away from each other? I'm going to explain you. Today, the expansion will come in the opening bell itself. Nifty is falling. Gift Nifty is showing falling about 200 points. This is the concept that emerged from my observations while building the dual option engine. Only after building the dual option engine, I observed this. Not only the grid approximation, you can see the pivots, even the pivots also. If you start observing when the pivot starts, the compression starts here. Both the pivots are coming towards each other. Can you see over here? And this is the PE grid baseline when the expansion came and it started losing. Here, expansion came towards the opposite side and price call option, it started climbing above the grid baseline. You can see after an expansion, contraction, contraction, expansion. We just spend our time seeing for the compression. Of course, we see for the compression on the equity underlying. That is the concept, coiling leading to expansion. But all these days, I used to watch for compression. I coded for compression on underlying, and this was left out. All of a sudden, when I started created dual option engine, I started noticing compression on the option premium, that is pairs option premium pairs, then something came out of this. This is very interesting. Nobody has documented, or I have not seen any single video explaining about this. This is my own observation, which with the dual option premium engine, I've coded, I've added, enforced with not only pivots for these option premiums, and also I've added grid baselines to see after the expansion if they start moving inside the baseline, then it is a buying opportunity for a call option buyer or a put option buyer. The compression is the energy stored which leads to expansion. This concept I call as CE-PE Pivot Convergence. Here, this is the CE-PE Pivot Convergence when the premiums are very high. Let me go back here to the back side. This is the convergence. Because price is not converging here, because it is this call option is 14 July and it is very far off to 14th. See, it is on the 3rd July we are seeing pivot convergence. When the pivot starts converging, when the price starts moving above the grid line, you can take, this is the grid line. You can take the trade. This is the call option grid line. The price moved up. You can use this strategy and you can see when the price started falling below the grid line, this can be used for put writing. Put writings, written something, W is missing. Put writing, you could have used this strategy. You could have sold around comfortably around 118 or around 133. It came down to 43. It is a safe way. Even a call writer can also use this strategy. You can see before this convergence every time you see the convergence, compression, expansion, and here both the premiums did not come together, but the pivot compression you are seeing over here and the expansion and whenever the expansion is out of way, the compression, it starts compressed, expansion coming to compression, and then expansion, same thing. Same thing repeats on and on. So if you start the giving importance to the option premium behavior, that's what I'm told you. I told you in my last videos. If you start giving importance to the option behavior, that is like traders' behavior, price action, that is the price action, then you can make out and you can make out when to be in the buying side, when to be on the selling side. So this is CE-PE pivot convergence and expansion and CE-PE grid. Once you understand this relationship, you may never look at option premiums the same way again. Think of CE and PE premiums as two opposing forces, call buyers and put buyers, bulls and bears, right? This was a bear, this was a bull. Yesterday, it was a bear, opposite wall. These are the two walls. When the market is directional, only one side dominates. But there are moments when something interesting happens, both premiums begin losing energy. Actually, when the market gapped down yesterday, this was directional. Call option was directional, put option was directional. It came down, they met at the crossroad. After that, there was no expansion in the Nifty. You can also notice the time. Time you can notice. It all started happening by 12:55. After that, there was no movement at all of the premiums. It is foolishness to enter into a call premium or a buying option, call option, or the put option. Even for selling, also, you will not. Only if an intelligent person, if you would have sold the call option, written the call option, they would have benefited because call option will lose premium if the market goes down. So now, today, if the market starts going down, then call option premium and put option premium will expand again. Then you need to see, you have to shift to the same when the price approaches that level. For example, let me take you afterwards, let me duplicate and take you to the chart, Nifty chart. Underlying chart, let me take it to you to the underlying chart, Nifty 50. And see here, the price came down. What happened? Put option premium expanded, and at this area, if we go there, the call option and the put option were at the bottom. Same time, this is the grid level. What I have applied is the grid level. You can see the grid level, the price is, Nifty price is climbing above the grid. It is becoming positive. It is becoming positive. My grid indicator is telling this is the grid baseline and price is becoming positive. Then at the same time, when there was a huge expansion, this started converging. And these are the pivots already there in the system. You can anticipate the price, call option price, moving towards expansion towards this level or little bit level. This is the base grid line. See, call option expanded to 95 rupees from 27, you could have bought it 27 to 30, 90 rupees. That is a huge. You can buy in multiple lots. It is cheap. For an option buyer, this is an advantage, buying cheap call option premium and making profits. This is the way you can do it. Hero zero type trade, you can do it. The premium which lost the value to 23 rupees from yesterday, gapping down from the compression only, from 97, it gapped down to 23. So there comes an opportunity, you can enter into it. Again, same compression has happened. So you are going to see expansion in the market. We need to see when it starts climbing above the pivot. This is not volatility compression, not Bollinger Band compression. You cannot compare with, you cannot, whatever you apply, Bollinger Band or anything, this will not give you clear picture. So this is option premium compression. Market is no longer favoring either side strongly. So this is what you need to observe in the market. When there is an option buyer, you are not going to enter into the, after the expansion, when the direction changes, then you are going to enter into a call option or the put option. See, after the expansion, the premium of the put option increased and the premium of the call option came down, and you got an opportunity to enter into the market only with the help of the indicator grid line. And you can also apply my Nalini precision also. Nalini precision engine, you can apply and you can see and whether it is favoring it. So all my indicators, Nalini Lawrence system, whether it is Nalini Lawrence system or Nalini precision engine, grid system, everything will complement for each other. So now onwards, rather than see if sometimes this is the condition here. At that time, you see for the pivot compression, they are approaching with each other. When the price could not fall below, this type of presentation will also be there. When the premiums are very high, if we go to the same monthly 24,200, and I will apply monthly in this premium engine, I'll go to monthly inputs. I'll put monthly 24,200 call option, and in this input I'll put monthly 24,000 put option. Okay. Now you see here, you can see the premiums are very high. When it started, let me hide this. Here, 3rd July, the pivots, this is an expansion. Here you got an opportunity for a monthly put option to enter into it. If you would have held it, you could have gained for 501 rupees. On 8th, if you would have taken position around 161, you could have gained it. You can see there. This is the beauty. This is the pivot convergence and price falling below the pivot. Watch this. When the price moves here, you can do that. When now already market is second week. When this is the second week, I'm showing you the monthly 24,200 call option and the monthly 200 put option. Here, not that much of convergence. I mean, only pivots are converging. Premiums are not converging, shrinking here. Because the value, you can see over here, the call option is 272, and even if you place a cursor on this, both the put option and call option premiums are equal. You can apply separately and you can see. And you can watch this. Applying this, watch this. This is how you can make out the trade. This is the important observation. It was bothering me, but I was not able to make out, by seeing the compression on the underlying chart. Only everything mystery was solved by watching the option premium compression. So if you are trading on the options, from now onwards, start watching the option premium compression and option premium expansion. That will give you an opportunity to enter into the trade. Enter into even long trades also. Yes, friends, thank you very much. This is Nalini Swami signing off.